What you have received is a package of paper that is required by state and federal law to sign and date. Over the years, this package of required disclosures has grown from about 5 to 10 pages needing to be signed to what now encompasses a whole slew of documents set up to protect, and sometimes what amounts to confusion to you, the client. What we hope to do is to direct you to the meat and potatoes of this paperwork by explaining what the charges associated with the loan will be, how that affects your cash needs, and review what your payment estimation is as well. After this video, you should have a better understanding of what you are looking at, and most of this will make much more sense to you. However, we still want to review these items with you over the phone so that we may answer any additional questions you may have. Good faith estimate. The first place I would like to start is the good faith estimate, otherwise known as the GFE. This is usually located about halfway through the package or further. It is a 3-page disclosure with a HUD logo on page 1. Pause this video until you find it. Okay, great. Now that you have found the GFE, I want to concentrate on page number 2 of the GFE, which will break down all of the fees associated with this loan. As you go down through this, you will see in box A, it shows the adjusted origination fee, which is our fee for services. This also includes an underwriting fee of $995, so deduct that to show the fees that are being charged. Number 3 shows an appraisal fee, which you will pay directly to the appraisal company once the mortgage commitment is received. Box number 3 also included a funding fee or guarantee fee, which is a one-time mortgage premium charged by the government for the loan type you have chosen. Number 4 and number 5 are fees associated with title insurance. The title company is the group that will come out and ensure that all of your loan documents are properly executed at the closing, and will properly file these documents on your behalf at the county office. They will also ensure that there are no liens or encumbrances against the property prior to your purchase. Number 8 is the state transfer taxes. The state charges a percentage for each real property transfer in your state. Number 9 and number 10 are your escrow requirements for taxes and insurance for year 1. By year 2, we will have your escrow account built up with the payment being made each month for your mortgage payment. However, we need to prepare to pay the first year tax and homeowner's insurance needs. Page 3 of the mortgage application. Now that we have gone over the GFE, let's see how this affects you. Please go to page number 3 of the Uniform Residential Loan Application. This 4-page document should be at the very beginning of the documents. In the middle of page number 3, on the left-hand side, you will see an area called Details of Transaction. Take a minute to locate that document while pausing this video. In the Details of Transaction section, you see line item A is your purchase price. Line items E, F, and G are the items brought over from the GFE. Line item L are all the credits associated with your transaction, which include any earnest money deposits you have put towards this transaction, seller paid closing costs, lender credits, and any other credits as given by the seller for items such as the owner's title policy, taxes, etc. Now, look down at line item M, and it shows the loan amount. Add in the funding or guaranteed fee in line item N, and that gives you a loan amount with MIP in line O. After you subtract the credits from the GFE settlement costs. Line P is currently the estimate we have for cash needed to close if a positive number, or cash back at closing if a negative number. Page number 2 of the mortgage application. Back up one document to page number 2 of this same 4-page Uniform Residential Loan Application. In the upper right-hand corner, you will see the proposed payment for this loan. The principal and interest payment is the first number, followed by the homeowner's insurance, listed here as your hazard insurance. The next number is your monthly tax amount, and followed by any monthly mortgage insurance and/or homeowners association dues, if any. At the bottom is your total payment estimate. The principal and interest payment is based on the interest rate stated, which is an estimate. We will not know what your qualifying interest rate is until we have received the mortgage commitment, which is further along in the process of the loan. Interest rates are determined by such things as credit score, debt-to-income ratio, assets available, etc. Closing. Please look over each of these documents in this package, and if you have further questions, contact your loan officer to review any and all questions you may have. Once you have reviewed these documents, sign and date each of the documents where indicated. You may then forward those documents back to setup@crefco.com or fax them to. Once we receive the documents back from you, we will place the order for the appraisal and submit the documents to government underwriting, which takes about a week to receive the mortgage commitment. At the time we receive the mortgage commitment, we will call with the good news and have you help us with any remaining stipulations that the underwriter may require in order to close your loan. Thank you for your patience throughout this